Good morning, everyone. Welcome to the daily morning podcast of SBI Securities. Let us first directly move to what happened on the US Fed meeting front yesterday evening. So, yesterday, in line with expectation, US Fed has maintained status quo as far as interest rates in US is concerned. So, the status quo is that 5.25 to 5.5% interest rate range will be maintained. However, one of the clear dovish commentary which is coming from US Fed governor was that they are not going to wait for inflation to go down to 2% before start cutting the rate, and hence we may see 3 rate cuts to the tune of 75 basis point in calendar year 2024. That is the most dovish commentary I have heard from the US Fed Governor Mr. Powell, and the market has reacted to that. Entire equity market and bond market has reacted to that. So we have seen Dow Jones, Nasdaq, S&P up to the tune of 1.4%, and at the same time we have seen 10-year bond, US 10-year bond yield correcting to almost 4% in the trade yesterday, which is the lowest level since August. This clearly indicates that now the interest rate cycle has peaked out in US as well as in the majority of the global markets. At the same time, the key takeaway was that being a dovish commentary from the US, now we will see fund chasing all the emerging markets as well as riskier assets like commodities. So risk on trade is something which we may see, and we may see fund flowing out of US market, US bond market, and getting attracted toward riskier assets like emerging markets as well as commodities. So hence, probably a precursor to that, we have seen yesterday foreign institutional investor buying to the tune of 4,600 from the open market. So they are smart investor, they are ahead of time, and they have loaded their Indian equities prior to the US Fed meeting outcome. Yesterday we saw DIIs were in profit booking mode, so 958 crore worth of share were offloaded by domestic institutional investor in the trade yesterday. Moving on to the Indian market today, yesterday. So what we have seen yesterday, the days began on a lackluster note. Market was down, and during the close of the day, we have seen Sensex recovering to the tune of 484 points from the day's low, and Sensex settled at the levels of 69584, up by 34 points, whereas Nifty was up to the tune of 0.1% and ended at 20926 level. As we speak, the GIFT Nifty, which is an early barometer of Indian equity market, is trading up by 200 points, and this clearly indicates that we are going to open gap up in the trade today. Now, what will happen? Which sectors will participate in rally henceforth? What I feel is that rate-sensitive sectors such as banking, auto, real estate, etc. All this sector will now lead the rally. The reason being that in case the rate hike cycle peaks in US, we are expecting the similar kind of reaction across the board from the central banker, and hence we may see more of a dovish commentary coming from the Europe side, or for that matter emerging markets like India side. So rate sensitive will continue to remain under focus. Moving on to the market breadth yesterday. So yesterday breadth was in favor of bulls. So we have seen almost 2,129 stocks closing in green, and 1,646 stocks were in red yesterday. However, continuing its earlier trend of 52-week high, almost 8 to 10% of the entire actively traded universe is scaling 52-week high. So yesterday again we saw 342 stocks scaling 52-week high. Moving on to the stock specific development in the trade today. So NBCC has one order worth 1,500 crore rupees, and the stock will continue to remain under focus. So basically, the company has one order to construct 1,469 warehouses and other agri infrastructure for National Cooperative Development Corporation. The stock will remain under focus today. The next development is from IRCTC. The company is eyeing expansion in the non-railway catering business on a pan-India basis. It has already signed MOU with various government and autonomous body. Although this catering business usually takes some time to scale up, but one has to keep in mind that it's a good diversification for IRCTC, and we may see some reaction in the today's trade. Moving on to the next development, which is on PNC Infra. That the company has accepted rupees 394 crore offer from NHAI to settle a dispute raised by its subsidiary, and the company will receive 394 crore. That's a big amount for PNC Infra, and the stock will remain under focus today. The next development is on Jindal Saw. The company's board will be meeting today to consider the fundraising program. It's one of our top pick as far as ERW pipe segment is concerned. Once the fundraising program is over, we may see up move in this stocks also. Moving on to the IPO corner. So today is the day 2 for IPO of DOMS and India Shelter Finance Corporation. Both the issues were fully subscribed yesterday. So DOMS was subscribed 5.7 times in the trade yesterday, and India Shelter Finance Corporation was subscribed by 1.48 times. And we have a subscribe rating on both these IPOs. The detailed IPO note is available on SBI Securities website as well as on Telegram channel of SBI Securities. You can also get in touch with your dealer or advisor to share the note with you. Today, a new IPO is opening, Inox India, again one of the leading player in cryogenic tank manufacturing. The IPO is entire offer for sale for the tune of 1459 crore, and the price band has been fixed in the range of 627 to 660 per share. On a post-issue capital, the IPO is priced at 30 time price to earning multiple. It's a decent valuation, and one can subscribe to this issue also. We will be releasing a detailed IPO note on Inox India in the first half today, and you can refer to it on SBI Securities website. Again, it's a very prestigious issue, because what we are seeing is that the entire offer for sale, the entire issue is offer for sale, and there is no fund requirement or infusion in the company. This clearly shows the robust business model of the company, and this IPO will also get a phenomenal response in the trade over the period of next 2-3 days. Moving on to the institutional activity, so we have seen a block deal in Axis Bank. So yesterday, a private equity Bain Capital exited a minor stake in Axis Bank, and that was lapped up by the many marquee institutional investor. We have seen selling from the promoters of Suntec Realty in the open market. We have seen buying in updater services by Birla Sun Life Insurance. So Birla Sun Life Insurance has bought almost 3.6 lakh shares in updater services at rupees 305 per share. Moving on to the insider trading, Paisalo Digital, there we have seen buying by promoter. So almost 9.9 lakh shares were bought by promoter in Paisalo Digital, whereas we have seen selling by promoters in the Usha Martin. Now, one thing is very clear that we have seen a massive selling from promoter in this entire calendar year 2023. Almost to the tune of 1 lakh crore, that is 1 trillion rupees. And time will only tell that who is right over the period of next 12 to 18 months. So that's the record high selling by the promoters and private equities in the Indian equity market. And everything is being lapped up easily by the institution and retail investor. However, the only point is that there may not be any losses for institution and Indian retail investor. But it is expected that we may see some subdued return in all these counter. But let's see, time will tell who is right, whether promoters or investors are right. To sum up today's discussion, overall setup looks pretty positive from a global market perspective. A clear dovish commentary from US Fed, and this clearly indicate that even other global other central bankers, whether it is from developed world like Europe or developing economy like India, we may see a dovish commentary coming from across the board, and that will lead to the outflow of funds from US bond, and that will risk on trade will be seen in emerging markets as well as commodities. In terms of strategy for next 3 to 6 months, I think rate sensitive like banking sector, within banking, private banks like HDFC Bank, Axis, ICICI, IndusInd Bank, or any other small finance bank, that will be remain under focus from a medium to long term perspective. On public sector side, large size banks like Bank of Baroda, Canara Bank, Indian Bank will remain under focus. Moving on to the auto sector, so we have seen a nice bump up in volume for two-wheelers after a long period of time, and Hero MotoCorp will be on radar, one of the company trading at a decent valuation. Then on real estate side, one can look at companies like Godrej Properties, Oberoi Realty, Phoenix Mill. So the entire sector will remain under focus. The way markets are scaling up, Asset management companies and stock market intermediaries, brokers will also remain under focus. Companies like 361, Nuama, or broking companies like Angel One, IIFL Securities, exchanges like Bombay Stock Exchange, CAMS, which is one of the leading processor of mutual fund transactions. So all this entire pack which is linked to the equity market will continue to remain under focus. In addition to that, government and the sectors where there is a infrastructure related sector like cement, or for that matter road or construction companies, water companies, defense companies, those companies will also remain under focus. That's all for the day. Thank you for patiently listening to us. Have a good day.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.